When the cost of living creeps higher every single month, keeping your head above water starts to feel impossible. People everywhere are looking for a lifeline, a secondary income just to maintain the status quo. That exact pressure hit a Reddit user named SafeXO. To build up a cash reserve, he made a drastic move. He sold his $20,000 car, bought a cheap $10,000 replacement, and kept the 10 grand difference in cash. He took that hard-earned cash straight to Instagram, scrolling through reels until he bought into a day trading group, hoping for a quick return. This chart shows exactly what that kind of volatile trading looks like. At first, the strategy seemed brilliant. His $10,000 investment quickly spiked to $11,500. But look at the drop. In a single month, that account plummeted to $7,000. Fast money schemes are often zero-sum environments that prey on economic anxiety. You walk in hoping for a lifeline, and walk out with less money than you started with, completely sold on a dream. Recognizing the trap, SafeXO cut his losses. He finished college, landed a steady, better-paying job, and stabilized his life. With his finances steady, he picked up a far more grounded hobby, cooking. He started watching YouTube culinary videos and was introduced to the world of premium Wagyu beef. He wanted to try it himself, so he went out and bought an Australian Wagyu steak. The sticker shock was intense. He paid $110 for a single 16-ounce cut. Paying that premium price turned out to be a pivotal data point. It was the moment SafeXO felt the personal weight of a high-end retail markup he would eventually look to disrupt. Looking deeper into the luxury meat market, he found that Japanese A5 Wagyu, the absolute highest grade, retails in the US for an astronomical $150 to $180 per pound. This bar chart compares those US prices directly with the source. If you buy the exact same quality of meat directly from its country of origin, like Japan or Australia, it is roughly 60% cheaper. In economics, exploiting this exact type of cross-market price gap is called arbitrage. You buy in the cheap market, sell in the expensive one, and capture the difference. SafeXO realized that the massive markup on a single steak provided zero actual value to the meat itself. It was entirely a fabrication of global middlemen taking their cut along the way. These high retail margins represent a structural gap that an entrepreneur can target. By stripping away the unnecessary layers of traditional distribution, he decided to cut out the noise. He contacted farms in Australia and Japan directly, completely bypassing the exporters, importers, and domestic distributors in favor of a single straight line from the farm to his front door. To test the concept, he took a calculated risk and ordered 2 full boxes of premium beef, totaling between 90 and 120 pounds of inventory. With his wholesale costs locked in, he set his retail prices, $40 for Australian Wagyu and $75 for Japanese A5, plus a $60 shipping fee. This structure creates a perfect dual win. The seller secures a highly lucrative profit margin, while the end consumer still saves 35% compared to standard retail prices. But now he faced an immediate logistical challenge. He was sitting on over 100 pounds of perishable luxury meat, with absolutely no established customer base. He started scrappy. He jumped on his personal Instagram account and began pitching the steaks directly to his friends and family. Then he found his engine for early scaling. He physically went to local churches and promoted his product, tapping into a high-trust community that actively looks for ways to support its own members. The grassroots network delivered. He began consistently moving 30 packs of steak a week, generating $1,800 in weekly revenue. If you want to bypass a massive corporate supply chain, you have to replace it with something just as strong: hyper-local, high-trust community relationships. When you consistently distribute high-quality products locally, professional institutions eventually take notice. SafeXO secured recurring business-to-business wholesale contracts with local restaurants, triggering a massive scale-up event. Look at how this area chart visualizes that growth. His operational volume exploded, moving 150 pounds of wholesale product alongside 60 retail packs every single week. The revenue became so consistent that he achieved his ultimate goal. He quit his day job entirely and hired 2 additional workers just to manage the volume. A side hustle transforms into a primary enterprise the moment you stop relying solely on individual consumer transactions and start securing recurring business-to-business contracts. Look at the difference between his 2 ventures. On one side, you have the abstract, chaotic failure of day trading. On the other, a solid, tangible product sitting on a butcher's block. As SafeXO himself puts it, trading courses are a scam. We believe in our service and have sold locally and collect payment once we give product to ensure customer satisfaction. SafeXO's success was built by identifying a specific real-world pricing gap and creating a community-based supply chain to fill it. A huge thanks to Reddit user SafeXO for sharing the blueprint of his entrepreneurial journey. To read the full breakdown of this story and discover other proven business models, visit HustleGrower.com. Make sure to subscribe to the channel so you never miss our next deep dive.